Hey traders, checking in on the stock market today. The bulls in complete control on the back of the stimulus being passed late on Friday night. We're seeing a lot of back and forth over the last 5 or 6 trading days, but one thing is for sure, we have a very key resistance level in play for the vast majority of individual names. It's going to be tested tomorrow, and that's going to determine whether we have tightening ranges this week or clear bull breaks. I'll show you the levels that I'm looking at. So if you are feeling like this market has been bipolar over the last 7 trading days, it has. The only thing that's keeping us looking bullish is the weekly uptrend, the longer term time frame. We had 3 days here where it was all bears into a very significant 2-day bounce, into a very significant 2-day drop, into a very significant 1-day bounce. That's a lot of choppy back and forth action if you're on the daily time frame. If you're on the weekly time frame, you say, oh, well, that's healthy consolidation and we're looking for a weekly high or low to keep the uptrend. It's way more simple when you zoom out. So, the most important resistance level that we're watching into tomorrow, and this is the case for the vast majority of individual names and sectors, it's the high of the last bounce attempt. For SPY, it is 392.23. We are either going to break that level and be a skip away from all-time highs less than 1%, or we are going to reject from that level tomorrow and see a tightening daily range. And this range is wide enough that it is possible that we trade within it for the majority of this week if we were to reject tomorrow. What we saw today was the exact opposite of what we saw Thursday. Thursday, all major sectors at the lows at the same time, high bear volume flush. Today, all major sectors at the high of the day at the same time after a stronger gap up open in many of those names, and the bulls just controlled the entirety of the day. There was just the brief moment where QQQ was trying to sort itself out this morning, where we had the high of Friday was 319.11. We broke it. We then hit the low of the day. We then had a really nice 2-minute equilibrium break bullish, and that is all the bulls needed. At that point in time, XLF and XLV were already at the high of the day. It was just a question of, are we going to get all 3 sectors at the high at the same time? And that is certainly what we got, which is what led to very significant follow through. SPY had an hourly bull flag. Anything above 388.25 would be an hourly high or low. If we lose that level tomorrow, odds that we are going to reject from daily resistance, at least initially, will increase. So key daily resistance, IWM, key daily resistance, 227.59 in play tomorrow. The weekly time frame remains extremely healthy in an uptrend and very close to the all-time high. QQQ. So we know QQQ has been weaker recently. Big time bounce. High of the bounce last time, 324.45 is in play for tomorrow. And again, if we reject, we essentially have a low, high, double bottom, double top, and we'll scout the high or low. And if we break it, weekly high or low, we'll be looking to be set. And from there, there is a lack of resistance. More ground to make up to get back to the all-time high comparative to SPY. But again, that would be a big-time sigh of relief for the bulls. Apple did it for the tech sector today. Apple just had a complete turnaround, 5% plus green day after being much weaker in the tech sector. Today that all changed, and there was some news. Honestly, I don't even remember what it was this morning. That was just a little bit of a narrative to keep the bull move going, but it was very clear that bulls were buying today after the first 20-30 minutes of trading. Today was the kind of day where I personally am not comfortable. If you ask me what is your most comfortable trading day for initiating positions, gap up opens are the least. Gap up opens, I look for selling positions that I already have, but as far as entering new positions, if you gap down, I look for oversold bounces, which is one of my edges as a trader, and I love them. If you gap up, what I did today is, I had a QQQ short to balance some of my long positions in my portfolio as we headed into the weekend, very uncertain as to short-term action and direction. As soon as QQQ broke the high of the day and joined all of our other sectors today, I instantly took off half of my short. So I was managing positions I already had, and I attempted a couple little trades with very small stop-out losses, but just not my day. Gap downs are my day. Regular opens, whether higher or lower, but within the range of the previous day, those are on point for me. But gap up and run, I would much rather sit on my hands and wait for the trade to come to me and for my ideal trade setups. So today, first day of the week, ready to go, hit the ground running, first day of the month, and I'm sitting there and my brain is constantly telling me, what are you doing? You should be trading. Why are you not in a trade? What entry are you going to be looking for? And I have those thoughts all morning, all afternoon. And every time I have them, it's an active game where I have to say, okay, I hear you thought, but no, that's not true. I don't have to trade at all today. I don't have to do anything. What are you talking about? And it's just constantly reminding myself that. And I would much rather head into tomorrow with a clean slate. And so I did enter a little bit more of that QQQ short up near the high of the day, just under, 323. So again, I'm back to a balanced portfolio. When I woke up this morning, or I should say when the bell rang, I had, higher opens in the metals, which faded, but higher opens in my SPY no touch, higher opens in my USMJ plays, and a lower open in my QQQ short. And that led to a very uneventful open for me, which is exactly what I wanted. Because again, just a fresh, clean slate. I can manage around it, and I can go long or short in my portfolio exposure based on what we're seeing. But the real money that I make is day trading. These swing positions are certainly minor compared to that. And today was a day where I didn't day trade much. So we'll see what tomorrow gives us. Financial sector, we knew to be looking for a daily high or low. It was just a question of when is that daily high or low going to be found. It happened to be right off the daily EMA 12 support, and we're looking right back at the all-time high, 33.84. That's our new line in the sand level, 32.19, that high or low. We would have to fail the all-time high and break 32.19 for any short-term red flags from here. Simple if-then statement. If 32.19 is holding, then the financial sector bulls are in complete control. And if we look at our laggard sectors, energy sector, gap up open, pretty decent day out there. We had, let's see, what did the hotels do? Higher open, not a whole lot of follow through. RCL, cruise liners, double daily inside bar, absolutely on watch for tomorrow. Gambling, higher open into profit taking. So financial sector bulls stood out by closing strong. The laggard sectors opened strong and closed a little bit weaker. That's a little interesting differentiation between them. We'll keep an eye on that. Healthcare, bounce, not a big factor. Anything under 115.36 is just a daily lower high. Bulls have to change the daily trend back in their favor. Then we have to change the weekly trend back in their favor. The bulls have a lot of work to do. A lot different standpoint with XLF and QQQ still in weekly uptrends. Biotech sector, high of the bounce of last week, most important resistance, 154.80. We are either going to reject from that level and tighten up, and there are names setting up where we will, if we reject from resistance, look at the 4 hour, because the 4 hour will be potential inverse head and shoulders, and SPY is the same. If we reject from the high of that bounce from last week, we will be looking for a potential 4 hour inverse head and shoulders to try and form. So again, resistance test for the biotech sector, break it, then we start creating space and our weekly high or low looks to be shaping up. If we reject from it, tightening daily range, and we'll be watching for attempted 4 hour inverse head and shoulders. SMH, high of the bounce last week, 250.05 in play. Same story, you get the idea. If we reject, it's a 4 hour equilibrium here because we didn't drop to a lower low. So all-time high, low of the drop, lower high, higher low, all about 252.34 from extended hours. If you're looking at regular trading hours, it's 250.05. If we reject, the equilibrium will continue. Again, resistance tests in play for everybody tomorrow. Solar sector broke the high of the bounce attempt from last week. So weekly time frame here, lost a lot of ground, and we will be watching for anything under 125.05 to be a weekly lower high. But a very notable day today, standing out with significant bounce follow through and seeing a bit more strength than some other sectors. The MJ sector, daily high or low, but rejected from resistance and closed fairly weak. So low, high of the bounce 51.08, higher low, failed to break resistance, tightening daily range is shaping up, and we have to break this tightening range bullish if we're going to see our weekly higher low being set. And the VIX, solid red day, red Maribozu, giving back the majority of the move on Thursday. And again, we know that the bulls only go up really hard and fast and strong when all of our major sectors are at their lows at the same time. And we saw the opposite today. So obviously it's going to be a very weak volatility day if all of our sectors are at the highs. There have been multiple days where the sectors have shown us the direction on the day, and they keep that. And I'm looking at SPY right now. They keep that control. Thursday and Friday, well, let's go all the way back. Wednesday, all bull. Thursday and Friday, all bear. Today, all bull. So again, you don't have to be, if you're not comfortable, you don't have to be making entries, but it's also just as important to not be constantly trying the other direction. I would have been looking bearish today a lot more actively if we weren't seeing all of our three major sectors at the high of the day at the same time. As soon as that happens, it's an automatic, don't fight the bulls for me. It's a lot easier to fight the bulls when you are seeing some sectors with weakness or have resistance levels to be playing off of nearby. The dollar, big 3-day move. We do still need a daily trend change to confirm, but what I care about more than that daily is the weekly. Can we change the weekly trend? You've been watching us talk about this dollar for the last 2 months. And again, it was a very crowded bearish trade, which is the only reason, along with 88.25 key 6-month chart support, the only reason we were keeping an eye out for the bulls. It is still possible to change the weekly trend bullish for the first time in a very long time, over a year. The bulls have to prove it still, but it is in play, 91.60. All I care about is 89.68 and 91.60. Until one of those levels breaks, not much is happening with the dollar. What I am noticing from the dollar is these last couple days, yes, the broader market showed weakness right here. Obviously, the broader market completely disregarded the weakness today. And again, you can point to the stimulus headline and narrative being a reason for that. But we're seeing commodities negatively react to the dollar a lot more than stocks right now, and a lot more than crypto. Crypto had a very solid bounce on the daily time frame as well. And if you look at the metals or oil or natural gas, just the last bunch of days, last 3+ days, we're seeing some notable weakness. So gold looking right back at the low, bounce from Friday, 4-hour lower high right off EMA resistance, down to test the low, but because of the size of this pullback, we're just going to be looking for another 4-hour lower high on a bounce. And if bulls do not change the 4-hour trend, all we're doing is cooling off RSI levels to allow for another leg down. Silver has more space to work with, and it's much more likely to change the 4-hour trend if we can shift momentum. 4-hour EMA 12 resistance, have to hold 26.13 and break 27.08 to confirm the 4-hour trend change. If we do not change the 4-hour trend, bears keep complete short-term control. The miners remain weak. We close near the low of the day. The miners have been leading the way to the downside, and they are still doing so. Lack of support in this area, significantly off of their highs. Next support level, 41.93. But time decay is a factor here as well. Actually, no, it's not, as we're not leveraged. Oil. So here's our oil weakness. Couple day pullback. Anything above 58.60 is a daily high or low. But we're in a scenario now where even if we do keep this daily uptrend, because of the size of the pullback, we will be watching for the potential of a daily head and shoulders. So bulls need to change the 4-hour trend back in their favor while holding 58.60 to keep the daily uptrend. But aggressive bears from that point will be looking to top fish the 63.81 high and then hope for a confirmed daily downtrend, because we have not seen weekly consolidation in a while, 5 weeks. But more importantly, we've run up, 25% since our last weekly consolidation? 25% move. So keeping an eye out for a loss of the daily uptrend, as the bears are showing up the last 2 days with the dollar strength. Natural gas, still trying to get a daily bounce going. 4-hour trend change shaping up. Have to get over 2893 to confirm the 4-hour trend change for the first time since the high of our bull move. But because of the size of the pullback, even if the 4-hour trend change does take place, we are just scouting a daily lower high, anything under 3315. Notable weakness over the last week plus. So that is where we stand. Uneventful day for me personally. Congrats to the bulls that swung positions. You would have had to have swung bullish positions in the face of some notable Friday weakness. So that deserves some credit. Other than that, key resistance tests in play tomorrow. Tightening daily ranges or clear bull breaks, which increase the odds that SPY is looking right back to the all-time high and keeping the weekly consolidation very healthy. So that's where we stand in the short term. Again, how many trading days do we have in a year? 250 or something? And how many years can we play this game? 10, 20, 30 years? To skip a day because it's not your ideal scenario and not your ideal setups is very healthy. There are so many opportunities in these markets on a weekly, yearly, monthly basis. I promise we are never going to enter a market. As long as markets exist, there will be massive opportunity. See you next time. Do good things. Been placing seeds along this fence to get the turkeys to tear up all the weeds that are going to be growing along this fence line. Trying to do two things at once.